Good morning, it's February 1st, and today we're going to focus on the UK. Many of us invest globally, and there's a lot of incentive to invest in a non-consensus way. So if the UK has been beaten down like it was, through the fall, it theoretically was a good time to start looking a place for sourcing, and you might think so now as well. But I'm going to first look at a chart from Bloomberg. Here is the ETF, the iShares ETF for the UK, and what you can see is, it's pretty much where we were almost back in 2018. And then from the bottom in 2022, it's had a massive ramp up. So now I want to go to another chart from ASR, which I love, and it shows that there's probably structural issues with the UK economy. While recently people have been talking about Megxit, let's look at the more important Brexit. The UK already had a very low investment rate. That's you can see this very strong kind of tealish line here below some of its peers before 2016, but we can see the huge divergence post the referendum here that I highlighted in yellow. And there's stories of how difficult it is for companies to do business with the UK, from folks in the UK trying to trade with their former clients and partners outside of the UK. So trading rules and labor rules are definitely keeping a lid on growth. So unless we see a lot of stimulus or policy to fix this, we'll probably see this relative underinvestment per GDP trend continue. So now I'm going to flip over to Longbow to say, well, how do we look at that from a technical perspective? So here on Longbow, all I have for you today is just one security. You obviously can put in a ton of names that are big in the UK. We own some of them, but I figured this would be easier to show you an ETF, the iShares EWU, which is the UK. Here, it's no surprise that you see a bullish momentum indicator for the short term and medium term. Just like almost all risk assets, it's bounced since the fall. But I would take a look at, okay, it's nearing the bottom end of the range. This is when, again, we talk about looking at the macro, looking at the fundamental, looking at the tactical. So tactically, it's not a time to invest. And we would argue if there's a structural difference between this security and other ones that might be related to France, Germany, other countries in the Eurozone that don't have these Brexit problems and investment spend problems, maybe you should look elsewhere. Because here we are, you can see this range is really narrowed. So you don't have a lot of wiggle room. It's not like you're in this some huge range and you're at the bottom of the range. There's tons of upside. And we look at the range R, it's 3.4 to 1, but it's a pretty tight range. So you have to ask yourself, well, how much could I make if it would go up from here? How much would it make if it went down from here? And I'll show you where to look for that. But again, you could see it was much wider, but it's really narrowed, especially recently. And it seems like maybe that's a time that you'd want to pause and not be using the trading ranges to be entering if you have some fundamental and macro questions about it, as well as from a technical standpoint. So here what we can see is you look at the downside and upside. And what I like about Longbow, we put in some eyes here so you can really understand what are the odds, what do these things mean, but you have upside of 1.5%. So take it for that, what it's worth. And so that's why I wanted to put together for you on a country you might be hearing about, one that people think's been knocked down. At the end of the day, you look at the security price, you look at some of these technical signals, and you look at what the upside and the odds are, and you say, maybe I should look elsewhere. So that's it for today. We've got a big fun day ahead of us here at 11 a.m. West Coast time, 2 p.m. East Coast time. Well, I want to bring a little bit of Eurozone to you today. I'll see you back tomorrow, and my guess is we'll be talking about what happened today with the Fed. Take care.